Hello everyone, this is Evan from the Trade Risk here on Wednesday, February 3rd with a market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then get into some individual names and then a few trade ideas to have on watch heading into the rest of the week. So today, a very volatile session. We ended up closing up 60 basis points in the SPY ETF that tracks the S&P 500, and that was after being down over 1% on the day, 4-point range. And look at the big tail here from today's session. So let's discuss where we are now. Remember, we closed out the week last week on Friday at the high. So we closed out here 193.50. We saw that big surge into the end of the month, and we came into the week with some, perhaps hopefulness here that this was going to continue, that maybe this bounce could still have some more fuel to it. Monday ended up being a digestion day. We ended up opening lower, but we held in there, closed near the highs. That was very constructive. Tuesday was the big rug pull. Yesterday, suddenly another big gap down, and we were challenging this very important 190.50 level, which kept the lid on price for most of last week. So you can see here we have the larger range at work, which is right around 194.50 all the way down to today's lows at 187.50. And then you also have this midpoint here to reference. 190.50 or so is what I'm calling it. But it's where you can see this cluster of highs here where we couldn't quite push above last week in the market. And that was a very important level for us to get above. And that's what ignited Friday's move. So as yesterday, as we gapped lower, we closed down into this level. That was a very uncertain sort of, well, maybe this is the start of the rollover, or maybe this was some type of overshoot. That's the way we were looking at it. Today we were looking for more context on yesterday's session, and we certainly got it. What started out to be a horrible session, thinking, at the beginning of this day, we were discussing, well, let's line up our short candidates. Let's see if this market closes on the lows. Let's see what looks good on the short side. The one thing, and this is, I think, was the clue, or at least helped us not get too overly bearish today, was the NYMO, was the McClellan oscillator, held positive throughout, even at the lows of the day here, was still managing to hold right around zero, which is constructive, which is at least to say that, everything's not rolling over, they're not throwing away everything, and to me, that's a constructive sign. We ended up reversing hard and closing back above this 190.50 level. I consider that short-term constructive. I like the reversal that I saw in the McClellan to close higher today again. So we did a little buying today, a little optimistic here that maybe we can retest the top end of this range. Again, I think while we're in this range, look at the way these moving averages are positioned. There's no direction. There's no strong direction. So I think volatility like today is still something that we should expect going forward. It could be real messy with wide range bars sessions while we're still in this range, while the market sort of figures out the bigger direction at hand of which way, we're ultimately going to break for, the next several months or so. So, I think it's a win for the bulls for sure. We retested this support down here. It held. They bounced us strong, cleared above this little midpoint here. So I think that's constructive. They have a little bit of wind behind their sails tonight. So let's see if they can if we can get some more continuation higher tomorrow. If we end up gapping lower again, it's just going to be one of those markets that are, it's just going to try and frustrate the majority, chop people around. And until we get a resolve out of this larger term range, I think these are sort of the levels that you should be watching and just seeing how things react when you get to those extremes. Now, if we look at the IWM, similar scenario here. We saw a nice reversal. We're back above this area right here, which I don't have drawn, but essentially, right in here, right above 199.50 or so. This is an important level to hold with all of this, traded supply and support that it grinded up here for the past week or so. So that's very important for the IWM to hold. You could make a very good case here that this is a bear flag in the making. We'll have to see. So far, it's holding as demonstrated by today, closed up a little bit. The Qs, this is where a lot of the pressure was today. We'll get into it a little bit, but a lot of the high-tech sort of leaders, high market capitalization, Netflix, the Facebook, Google, getting hit today and causing a lot of pressure, and I think that spillover was just being seen in across markets today, especially this morning as we were kind of cliff diving, off the side. So a reversal nonetheless, so that was important. Reversed off this $100 level, that's important. Last week, basically the lows from last week, so that is constructive. That's the line that the bulls need to hold on to. Let's see if they can. This is where I'd be a little more uncertain. This sector here, and these names, just gonna need a little more caution, just given the way everything is. So certainly the most bearish in the short-term technical picture out of the indices. Now, if we look at some other markets, TLT, a sharp reversal. This was getting bid up nice and strongly today as everything was kind of falling off the edge. It did reverse, closed on the lows. Still, the strong uptrend remains. Look how extended it is from some of these fast-moving averages. It could use some time to come in, maybe another 1 or 2 days down, and I think that would still be constructive just given the strong uptrend. I don't see anything changing right there. If we look at gold, nice strong session here as well. Ever since clearing back above 104, it's been on the rise, so looking pretty good. Weekly time frame, you can see starting to get this bullish crossover here on some of these fast-moving averages. That is very constructive. Silver. This is actually a position we took some silver long here into the end of the day via USLV, but this looks good here. We cleared above this 13 3/4 level. You can see very clear resistance here. It's failed here most recently last week, actually the 27th on Tuesday or on Wednesday. It actually failed to hold this gap up. So let's see. We're trying it again. It didn't quite close on the highs, but that's fine. I think being 20 cents above this media area is still good enough for the breakout to work. I think a clear stop, right around 13 3/4, or depending on how tight you want to keep it. I think the line in the sand is pretty clear there. So we're going to see if that can continue. USO. So here's the big story: 9% higher for oil. Very constructive for markets. Closed on the highs of the session, and I know there are inventory reports out today that I believe were should be perceived as bearish, but we managed to rally on it. I think that's good. If the market can rally off bad news, that's always sort of your ideal, most bullish case for markets. So looking good here. I mean, looking good is certainly subjective. I mean, you're in a brutal downtrend, but for now at least, the bulls are showing signs of life below $9 here on USO. Anytime it gets below there, it's not staying below there long. You're seeing these wide range and bull bars emerge here, so is constructive. Not so sure I could stomach chase. It's not a position for me, but certainly could see the merit behind it, especially for the shorter term traders out there. Now looking at some of the individual sectors. So really what caught my eye today was the material names, basic materials, industrials, energy. Those were all surging today, and those were mostly the very beaten up names that we've seen, but they caught a bid today. So especially XLB, XLI, looking good here, looking like it might, it needs to still clear 49.80 or so, but looking like that could start to work higher there. Energy catching a bid mostly off of crude here today. So looking constructive in those unusual sectors, and that the sectors that just really haven't been performing. And then technology, weak on the day. Financials were getting beat up. They had a really big reversal today. I think that helped to recover some of our late day rally. So interesting developments, but industrials, basic materials, those are coming up a lot in our scan. So see if that can continue heading into tomorrow. That's where some momentum is. We took some trades in there in that sector. So if we go through some individual names, Apple up 2%. It's funny, Apple's no longer considered those high, it's not in that high cap growth kind of Netflix, Google, Amazon, where it sort of used to hang out. Now you actually see Apple trying to hold green most of the day, as it just becomes more of this, defensive name, if you want to call it that. Regardless, closed up 2% today. Still in a kind of a tough looking pattern here. Fast moving averages still racing lower. Doesn't look a whole lot actionable just yet, but certainly seems like it wants to start to put on some type of short-term bottom around here. These 94.50 lows or so going to be very important going forward. Google got hammered today. You can see follow through to yesterday's earnings day session to the downside. Again, still basically right at the fast moving averages, so not a whole lot of damage done, but it's very convincingly back in this range. Really need to readjust sort of the levels here in Google, but essentially, you know, it's got to get back above 800, 790 or so on the upside to really gain that momentum. You got a big pivot down here right around 680, and then you have a lot of messy supply right in here, right around 735 or so, where it found some support today. So, you know, expect maybe some more volatility here. 4% could be more to follow. I'll have to keep an eye on that. Amazon, this one's falling off here to the abyss, where back in October of 2015, or the next big reference points down here right around $500. So perhaps it's needs to retest that. There's not a whole lot to cling on to in here. You know, perhaps some type of measured move leg lower as we made this, you know, 694 down to 550. So maybe we get 100 points down, 130 points down would get you right around 500. So maybe we're heading down lower. Still overextended a little bit to the downside. Fast moving averages racing lower. Still, you know, it's just not something you really want to try and knife catch. Facebook, you know, beaten up here. Still got that rally off the lows. So the most constructive of all, of course, just look at the technical picture here. It's above all major recent supply. So this is still very healthy. Fast moving averages still racing higher. So this definitely could use a rest. It would be constructive for it. So, you know, let's see if it can continue to base out for the next few days. Twitter saw a nice push today higher. These lows here that it tested in the morning, very important. This was basically a double bottom from last Wednesday, right around 1550. Still a lot of momentum to the downside here. Favors the bears. Let's see if it can put in some type of base and eventually try and reverse, you know, all of this downtrend that it's been in for multiple months now. Tesla, this one's another name, that high-profile growth name that's getting beat up, breaking major support here going back to 2014, so right around 180 or so. We're closing below it. In the weekly time frame, you don't want to see a close below here. If you're bullish, you want to see this reverse by Friday, try and get back above 180 or so to put some type of life in here. Otherwise, I think, you know, this one's certainly in danger for trading lower. Again, momentum still favoring the bears here, so you got to be careful in Tesla if you're trying to dip by that. GoPro saw a bit of a surge here, 4.5%, still in a nice tight range, 11.25 to 1030. Their earnings are out soon, so keep an eye on that. And then finally, Alibaba, this one rolling over a bit today as well, reversing off the $60.60 lows, but it's coming back down to the October lows from 2015. So again, momentum still racing lower here. Tough to chase this. It's damage all around. Just let this set up. Needs a couple of weeks or so to finally reverse course. Check the earnings on this. I'm not too sure when those come out. So as far as some actionable names, there were, you know, in the oil services space, there were a lot of names that looked very, very similar. So something like GPOR here, where you had a strong leg higher and then it, you know, consolidated for a few days and then it was pushing higher. So something like that. ENB, same thing. We had this push higher, then, you know, some consolidation. It's moving higher. XEC, all of these names get this similar pattern, but they all look fairly actionable, especially if you believe in crude here, that it can continue to bounce. So these are all names, you know, you could have on watch here. CBS, another name, not in the oil services space, but something that's emerging from a level that has caused resistance and has caused price to stall out right around 47.50, trying to get going here. CLH, another one, waste management, industrial sector. You can see this one trying to emerge here. So we had this strong leg higher, fast moving averages racing higher. Look for some maybe more continuation there. And then finally, one that we got involved in, SWFT. This one here, you can see breaking above $17. Essentially, this big consolidation here, you can see it trying to work itself out of that today. Fast moving averages racing higher, definitely a chase, but you know, it's where the momentum is. It's where you see some kind of panic buying going on. So this is a name that we got involved in at the close today. So that's what I have for today. Hopefully you enjoyed the video. If you like it, do subscribe on the bottom right. As always, thanks for watching, and I'll catch you next time.